Today is Sunday, April 20th. It's Easter holiday. Markets have not opened yet for the Asian session, but I'll just go over the trades I took last week and maybe check any setups for the coming week here. So last week I took 3 trades. I entered on gold and I tried to sell on USDJPY. So let me go over the gold trade first. In gold, I bought on Tuesday here, and I was holding these positions until Wednesday. So yeah, I was buying this breakout of the 32.45 level. I think I mentioned I was a little late to buying, but luckily this trend continued onward, so I was just holding here. So yeah, this was the price action for gold. We continued to a high of 33.57, and then on Wednesday there was a bit of a retracement starting in the Asian session. And then yeah, during London and New York overlap we had another further down retracement, and but the market closed back up at around 33.27 on Thursday close. So Friday was Good Friday this week, so there was actually only 4 trading days for the entire week. I got a few insights from this abbreviated trading this week, but for the weekly chart, we still had a bullish continuation after the previous engulfing candle the week before. So right now it's gold is still trending on the weekly time frame. On the daily time frame, this last day turned into kind of like a hammer candle here. So we have a wick, but this candle is much smaller compared to the Wednesday candle. So let me talk about how I actually entered and exited this trade. Mostly the exit, since I covered the entries already. So yeah, I was checking the market around Wednesday. Tokyo session opened up kind of sluggish, not really a lot of advances, and then we got a big 1-hour sell-off candle about 1/3 of the way into the Tokyo session. So at that time I still had my stop losses at break even. I was trailing based on the 1-hour and 4-hour time frame. Because the Ichimoku lines were still trending up at this point, so I wanted to look for a pushback before trailing my stop losses. So the first, I exited one of these positions and I still have one of the positions open. So the point at which I exited the first position was around 10:51 p.m. In my local time. So that would have been, yeah, around here on this 15-minute candle. Let me just find the exact minute that I exited. Okay, so I exited right here. And the reason I exited was because I saw this sell-off over here. Sorry, let me go back. I saw this sell-off and then this recovery, and the recovery was testing the trend line support, which now became resistance, and looks like it was unable to recover above it. So after seeing some 5-minute candles pass, you know, this was bearish, doji, and then bearish. I decided to exit one of the positions right here. So as it happened, it continued to sell off for the rest of the Asian session, and then not much activity until New York started. So the other position, I actually thought I trailed it to 33.11, but due to one of my execution mistakes, I did not actually enter this order. So I kept it around my break-even level, which was 32.78. So if I had trailed it, I would have been exited automatically in the early New York session. So I would have been taken out here. But as luck would have it, the position stayed open. That was my error, and now I rode the price recovery back to 33.27. So I got some insights from how this price action happened. One thing I did not anticipate, I didn't really clearly remember that Friday was a trading holiday. So I thought Friday still had a full trading session, but looking back, Thursday was actually Friday's session, the last session before the weekend. So that makes a little more sense why there would be such a strong sell-off activity. So to put it into context, gold already had several sessions of gains after this breakout. So there is room for people to take profits before a weekend, especially a long weekend. So had I considered that fact fully, I may have exited both positions at the beginning of the Tokyo session, and perhaps even a little bit earlier when I saw I was very tempted to exit at the beginning of the Tokyo session here, even with my first position, given that the range of these 1 hour candles was diminishing. This is kind of like a asymptotic move in the 15-minute and lower time frames. But I wanted to wait for a confirmation, so I accepted that there would be a sell-off here, but potentially, if I considered that Thursday was the last trading day, I would have exited both positions somewhere around here. But overall, it doesn't mean the gold trend is over. So this could be seen as a bounce on the Kumo on the 1 hour chart, or a bounce on the Tenkan Sen on the 4 hour chart. So yeah, I may still exit the second position on today's open, depending on what happens in gold. But yeah, so this leg on the 4 hour chart is a little bit of a shorter leg compared to the previous one. But if you look at the level from the breakout level, this is about the same. So this was 88, almost 89 points. And then from the breakout to the top of this leg here is about 100 points. So 3% and about 2.5%. So the question is the trend in gold still going to go up? It's still very likely if you compare the last few bullish candles with the bearish candles. The buyers are still in control of this market. So yeah, if you're following the daily and weekly trends, it's still not an exiting signal. You can still hold this trade, but in the medium and short term, this may trade sideways a little bit before deciding to break out. So what I could do is leave my stop loss around here, this wick low, and then just see if the 4 hour or 1 hour chart continues to flatten or break down. If it breaks down, then I'll just exit, but if it stays flat, I'll try to look for another breakout opportunity to enter. Yeah, so it depends on what time frame you're trading. I'm trying to graduate my holds from the 1 hour and 4 hour time frame into the daily or weekly time frames. So yeah, there could still be more room for this trend to run. But yeah, if you think that there's going to be a recovery period, it may be better to exit now and hold on to the gains and then look for another breakout on the 4 hour or 1 hour charts. So I was pairing the move with gold and trying to look at the move in the US dollar. I was looking for a potential for the US dollar to sell off either against JPY or the Swiss franc. So last week, I covered the first sell I took on Tuesday, but then I got exited on one of these positions overnight when this wick hit my stop loss. So I took another selling opportunity in the next day's Tokyo session, I saw this, strong selling towards the end of the New York session, and it actually gave me more confidence than my previous entry. Because I saw this continuation move, I just thought the exit was due to choppiness in the market. So I actually took a full 2% risk on this next sell. I think it was a dollar amount of around 5,000. So 2% of my account at that time was about 5,000, and I got kind of smacked on this 1 hour bar recovery. So technically, I don't think I made any mistakes. It's just on a dollar level, this was more volatility in my equity curve than if I was trading with my usual risk position. So yeah, I thought the sell-off in the dollar was happening, but again, I didn't realize it was the last trading day of the week. So it made sense that these setups could continue or even reverse on the last day of the trading week. So yeah, again, that was my mistake. I did not fully consider the number of trading days in this week. Had I known Thursday was actually the last trading day, I may still have taken this trade, but I probably would not risk 2% on this one. So let me show how this trade unfolded in the 5-minute chart. And the moment I entered was exactly on this 5-minute candle at 4:30 my local time. So I saw Sydney opened, there was this buying candle here, but then it continued to sell off after Tokyo opened. So this 5-minute candle closed below the closes in the New York session. So I took it as an entry confirmation, and as luck would have it, I entered pretty much exactly at the low of this price action. And then in the next half hour to an hour, there was this huge buying. I was waiting for a reaction to this buy here, but then the price just kept breaking out, so I had to exit at this level here, 142. I exited one position right here. What was the precise time? Oh, I exited exactly at 6 o'clock, so at the 1 hour candle close. So I exited here, and then it continued to break out against me, and then I just exited the second position at 6:27 p.m. my time. So overall, this was correct. I just took more leverage and lost a little bit more relative to my usual risk here. But yeah, so these were probably either short sellers who were looking to close, or anyone looking to take profits towards the end of the week. But whatever the reason, there was more buying on this time frame than selling, so the price recovered to about 142 before reversing in the London and New York sessions. Friday was not a trading day, so I'll just look at around the price that New York closed. So we closed at around 142.40. So yeah, this setup is still possible for dollar to sell off strongly, and if it does, it'll be a very strong sell off towards 139 on the daily chart. So yeah, I'm looking at this head and shoulders move and trying to pre-position on the weekly chart, but yeah, taking into context, I'm risking a little bit more in terms of an anticipatory trade before waiting for the breakout. I would attribute this big loss to two factors: the fact that it was a second entry, and that I took more confidence after seeing the New York session on Wednesday. So I was, you could say I was a bit goaded into taking this next trade. And then the second bigger reason was I didn't fully realize the Thursday was the last trading day here. So I was looking to sell either dollar against the yen or dollar against the Swiss franc. Let me just quickly take a look at how dollar Swiss franc turned out. So dollar Swiss franc is pretty much still trading flat compared to the previous week. Yeah, this is almost no buying activity. So if you look in terms of the daily, it's consolidating below the previous low at 0.838. So there's no, this is even weaker than the yen. So yeah, it's we broke out below this rectangular range 2 weeks ago, and then last week was not much of an activity, kind of a doji. But if it sells off again, it could go much lower. In terms of the weekly chart, this is an expanding range, sort of a 90-degree expanding triangle here. So it's quite hard to trade. It could reverse at any time, especially taking into context the 2011 lows here. So yeah, if we're holding above this trend line, it could still bounce at any time. But if you just ignore the past price action and look at this descending price action here, price is below the Tenkan-sen, which is below the Kijun-sen. Both are angled downwards, and those lines are below the Kumo. So if you only look at the monthly chart, this would be starting a descending trend here. But also taking into context, this is already a very large bearish candle move for April. If you compare to the history, there's almost no other candle that matches this in terms of the body size, unless you count January 15, and you have to go all the way back until 2011 to see candles of this size. So in terms of overall volatility, after the tariff announcements at the beginning of April, volatility has come down a bit, but it could go back up at any time, depending on what macro news comes out. So yeah, thinking about it now, this is quite hard to trade. If you think it's going to mean revert, then a mean reversion strategy would be going against these moves, against the direction of volatility. If you think there's more changes to come, then you would think of this as a breakout trend and try to buy in the direction of volatility the next few weeks. The euro is continuing to be strong. Let me just check the weekly time frames. So euro has settled above the breakout level of 1,056. This could be consolidation. If it breaks upward, that could be a continued trend. Yeah, for example, Euro USD, this is a nice triangle wave pattern forming on the 4-hour. So if it breaks out here, this could be a trading opportunity. Let me mark that one. Euro AUD, similar setups, but AUD is a little bit more volatile. The pound is not doing much, so most of the opportunities I see are in the euro so far. Possibly if the dollar sells off, USDJPY and Swiss franc may have more moves. AUD is also consolidating, so yeah, it's not trending on the mid time frames anymore, but it also hasn't recovered on the daily and the weekly time frames. Canadian dollar is a similar story. And then the Japanese yen, it could be recovering on the monthly time frames, but I'll have to see how it interacts with the Kijun-sen. And obviously gold is still trending, but in the midterm, there could be some sideways action. Let me check silver. So silver has not broken out, unlike gold. And copper is the same. A lot of volatility, but no breakouts yet. And Bitcoin, so Bitcoin is consolidating sideways on the weekly chart. Depending on what happens, it could continue to consolidate before hitting the Kumo and then going up higher. So that would just be the same consolidation as the previous leg on the weekly chart. And then let me take a look at equities. So US 100 last week was a bounce, or sorry, the week before was a bounce on the monthly Kijun Sen, and now we're inside the Kumo on the weekly chart. The bearish bar was a bit smaller than previously, but yeah, the price is still trading sideways here. S&P, similar story. Dow Jones, a bit weaker than the S&P and NASDAQ. But yeah, this is also a bounce on the Kijun Sen here. So yeah, US equities, they tend to bounce on the monthly Kijun Sen. So if you thought, you know, this the lows are in, this could be a buying opportunity, but also you don't know for sure if it can go below the Kijun Sen or not. And then let me check the VIX here. Okay, so yeah, we had these huge spikes in the VIX. Volatility is coming down. And let me check the bonds. Okay, so the near-term bonds, those are going downwards. Maybe the market is forecasting some Fed rate cuts here. Yeah, the 1 month is around 4.29. But yeah, the 10-year and above, we're still trading higher, around 4.8 levels. So very interesting. The near term, it is going down, but the long term bonds are still at the highs here. All right, so yeah, that is my recap this month. Unfortunately, with the last week loss in USDJPY, I didn't hold on to much of the gains in gold, but yeah, that was just a different sizing issue that caused the losses.